This is Alan Bush with ADMIS with the daily financial forecast for Tuesday, November 17th. In the stock index futures, we did see some very strong gains yesterday on very limited news. We're also seeing some follow-through strength today, at least in the overnight trade. Some of the gains that we are seeing early today are linked to better than expected corporate earnings. Also, some analysts are indicating that recent gains are linked to the belief that the European Central Bank later this year will be adding more stimulus. But futures performing much better than all of that news would suggest. In fact, the prospects of more accommodation from the ECB has been a fundamental that has been with us for quite some time. So overall, stock index futures performing very well for the news over the last couple of days. Also, we are seeing several economic reports coming in a bit on the weak side today. Futures, I think, are holding up very well in spite of that. Also, we may have some trouble seeing stock indices advancing in advance or ahead of the Fed meeting on December 16th. But once that meeting is out of the way, I think we can see higher prices and new historical highs for the major indices into next year. Now, moving over to the currencies, the dollar index advancing in the overnight trade. The ongoing theme is here that the Fed will be raising rates in December. So that is dollar supportive. But I'm inclined to think that the dollar is fully priced in here now. It also does appear that if the Fed does raise rates in December, that they will give a very strong indication that they will not be following with rate increases meeting after meeting. So gains in a dollar that we've seen over the last month or so, I think, are fully pricing in the more hawkish Fed. The euro currency trading a little bit lower, even though we did have the German investor confidence index coming in better than expected. But I'm inclined to think that the euro now is oversold, and we will probably see some recovery today in the euro. Now, moving over to the interest rate futures markets, some long liquidation today. Flight to quality longs were put on yesterday in light of the Paris attacks. Since then, though, we have seen a little weakness coming in, especially at the long end of the curve. And I think the dominant influence over the near term will be prospects of a rate increase from the Fed, and that's at the December 16th meeting. Also, the probability of a rate increase, according to the financial futures markets, now for the December meeting is at 70%. So interest rate futures markets will probably have a difficult time seeing any sustained gains in advance of that Fed meeting. But longer term, I think that we will probably see the 30-year bonds firming up, especially after the Fed meeting is out of the way. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.